Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend, David Morgan from the Morgan Report. David, it's great to see you.
Ivan, it's good to be back. Thanks.
Well, it's an absolute pleasure having you on. Jim, you want to start it off?
Yeah, so Mr. Morgan, you just sent this out. The real price of silver is $2,000 an ounce. That's pretty bold, man. A lot of people are going to be saying, "What's Morgan smoking now? What's your argument here?"
Yeah, definitely. Well, there is a question mark behind that, Jim. So let me start there. And let me also say that in print around 2003, I said the price of silver would get to 100. So that's 20 times less than 2000. But there is some thought behind this $2,000 an ounce. And actually, you were there with me at the Silver Symposium when I went through my lecture. And I talked about why silver is not money. Because if you look at silver from a historical perspective, its highest value is when it's money. Mm-hmm. When it's money from the time of recorded history, basically, you go back thousands of years ago, the gold silver ratio never got above 20. And most of the time it hovered around the natural ratio at that time, which was 12 to 1, not 16 to 1. That's a man-made monetary ratio. But the natural ratio out of the ground is about 12 to 1 in the 13th century or so, 12th century. And now it's it's about 9 to 1. It's less than 10 to 1. And yet the gold silver ratio is 75 to 1 right now. The point being is when silver is money and gold is money, and it's a bimetallic system, you have a very interesting gold silver ratio that's very close to the natural ratio. So it's beyond a shadow of a doubt that silver is valued as money higher than it's valued as just a industrial commodity. I think everyone knows that. Now, there's a lot of arguments about, it isn't money, and, I won't go there. Don't have time. But what I will say,
don't have time for that foolishness, right? Okay.
Not for me. But when we go to looking at my lecture, I said, there was and it's in this article, but if you go and look at the, labor force, and, all money is supposed to, coincide pretty much with labor. I mean, when you work, whether it's physical, mental, or combination, you're getting paid in some unit that is an energy unit, you could call it, with a piece of paper or a digit or a crypto or a piece of metal that represents that amount of value. And you can store it if you don't have to spend it, that day or that week or that month. In other words, if you have some ability to save, then that's stored energy. And that stored energy should maintain the labor value, but it doesn't in an inflationary environment. So I looked at what would happen if we went back and paid people in silver. So I took the United States as the example. There's 157 million in the workforce in 2019. That was the latest data I could confirm. And the average work week was 8.8 hours. And the average wage, believe it or not, was higher than I expected. It was I think it was 26 and 16 cents. So I rounded the 26 to about an ounce of silver. I rounded the 8.8 hour work day down to 8, and I rounded down the 157 million to 150 million workers. And I did the arithmetic, and it came out to being paid in silver be 1.2 billion ounces to pay the labor force in silver at current prices. Mm-hmm. You couldn't pay for the entire workforce of the United States for a day. And then, of course, the next slide brought up, well, how could you be on a silver standard for 400 years? And the answer, of course, and I didn't really give the answer out of my mouth. I wanted people to think about it, but obviously silver is undervalued so much in a historical basis that would have to be valued to what it used to be valued in times when we were on a silver standard or a bimetallic gold silver standard. So then I did some of that math, and I said, look, if the average wage is 28 an hour, and there's an 8-hour, day, then I'll round it up to 30 times 8 is 240. That would mean that to be paid an ounce of silver at 240 Now you have the ability to go for, 8 times as far.
Mhm.
And I also made the mention that the actual labor rate for years from about the 1880s, I don't know the exact date, people could correct me, but in that time frame, another day, another dollar. $1 a day was a great wage. And it was wage. Now, remember, a true dollar by definition is actually 3/4 of an ounce, but the Treasury punches out their coins and they say 1 ounce and it says $1. So the Treasury really doesn't know the definition of a dollar, but we'll leave it at that. I just want to get the general idea. So that would make it 200 an ounce, round numbers. And then I said, but just for the record, let's go one step further. And this is where I want to blow people's mind with this 2,000 an ounce title, Jim, because this is what gets people all frothy and now they hate me and they're going to unfriend me and all that stuff.
Yeah, it's catnip for our audience. They love it. I mean, people sort of like, that's a little bit too high.
Yeah.
But they love hearing it, right?
Yeah. So you go to the 200 an ounce, which is double what I wrote in like 2003. But in Roman times, 1/10 of an ounce of silver was a day's wage. So obviously that's 1/10 the amount, which means you have to take that 200 and multiply it by 10, and that's how you get to 2,000. So I didn't pull the number out of the air. I didn't pull it out for purposes of causing me to be unpopular or to run for political office. I just did it as a thought experiment.
Well, I've seen a lot of studies on what we would have to revalue gold at to address our current huge, massive growth in money supply, M2 money supply, and our huge national debt. And certain people on Twitter have made some complex analysis that gold would need to be revalued at about $40,000 an ounce just to balance the books of our current the current Treasury debt that we have. And that doesn't even address the unfunded liabilities we have going forward. So, I have my trusty calculator up here. So if we just throw in $40,000 an ounce for gold, and we just do a more reasonable, 20 gold to silver ratio, that it's plausible. I mean, and even if $2,000 an ounce for silver, if they revalued gold, the gold silver ratio has historically gotten to that range, hasn't it?
Oh yeah, well that would be at the top of the range for 4,900 years, which was 20 to 1. Remember when we started our discussion, I said that silver never got above a 20 to 1 gold silver ratio. Most of the time was around 12 to 1.
Yeah.
For 4,900 years, 4,900 years. So we would be at the top of the range to get to that. And during the 1980 hunt situation, the ratio got to 16 to 1. And whether or not it gets there again or not remains to be determined. But what we do know is in the final phase of a currency collapse, the run to gold is phenomenal, but the run to silver is phenomenal cubed.
Yeah,
it's not squared. It's times. I mean, think about silver double, redouble, and double again. I mean, when things really go, and there's a lot of forces that are out there that don't want it to go, and will do whatever they do. But if history is any indicator, especially with the global financial system in disarray, decaying further by the day, the average person now recognizes it. And you've got the internet and instant communication. So, if you don't know anything about silver or gold, as an example, but you're on a Facebook group that's worries about, or not worries, but likes to do bricklaying, I don't know, pick something. But one person in that group says, hey, you can buy gold at, Andy Scheckman, or you can buy gold at whatever. All of a sudden, that whole group is informed instantly on what URL to click to get on, to get real money. And I think that's what will happen. I think the run to gold will be so phenomenal that, as Mike Maloney has said, you'll have the unobtainium. I think that these dealers could be overwhelmed. We've already seen it too. I think that's important to bring up, Jim, and you can back me up on this. I mean, we've had times, Ivan, and you're well aware of it. In fact, I think you wrote about it a few times on Wall Street Silver that, you call in and say, I want, a modest amount, I want 100 ounces of silver. Mm-hmm. Yes, sir. 3 bags full. However, you got to wait 8 weeks.
Yeah.
We'll lock you in at this price. And oh, by the way, the premium is the highest premium we've had in the last decade. Do you still want it? The answer is yes, I do, and I will wait. That's what's happened already. So you can imagine when things really get going, what it might look like.
Well, I've heard Keith Newmeyer, who's really on top of this data. His people are saying that coming out of the ground right now, it's as low as 7-to-1.
Yeah.
Silver to gold ratio. The silver supply crunch is a very real thing. And I think, it's later this decade, it's going to be ridiculous. But on to, what's causing all this. The FOMC, put out the results this past week, and the Fed announced that they're going to taper, from 120 billion a month. They're going to take it down by 15 billion, 10 billion less in treasuries and 5 billion less in mortgage-backed securities. What do you think? Is this, I guess this is what everyone's been waiting for. Are they going to be able to reduce their purchases without the market freaking out?
Well, they tried it before and the market freaked out. So we have that as historical precedence. I think it's a trial balloon, Jim. I think they will do it and then see what the market reaction is and then adjust accordingly. I mean, at some point, someone's going to say, the emperor has no clothes. This debt is worthless. I mean, some of this mortgage-backed securities is pure garbage wrapped with a nice wrapper and a bow on it, but it's crap. The whole system, in a way, is based on the ability to pay back the debt that the United States has borrowed from a private banking consortium called the Federal Reserve System. And those private bankers are mostly Europeans. So, I mean, we owe the company stores, owned by mostly people that may or may not be U.S. citizens. But the federal government from 1913 onward has enacted a law that says we can borrow from this private bank. And then the backs of the people, the labor force of the people is pledged to pay it back to the bankers. So, and the old adage, well, we owe it to ourselves, it doesn't matter. It's horse pucky. It is owed, and it's owed by the labor of the United States citizen. If you're a U.S. citizen, you are pledged as collateral for that debt. Now, everyone that has 2 brain cells functioning knows this debt cannot be paid back. Mm-hmm. And the bankers know that from the time they start in a usury system. Because if you compound interest indefinitely, it goes to an astronomical number that's greater than the amount of atoms in the universe. I mean, that's the truth. So obviously they know. And this is why you used to have all these resets that were called jubilees, because you can play that scheme for about 50 years. And then it's like, okay, this is ridiculous. Let's start over and hit the reset button. And ironically, and Jim, I think we talked about this on your program with Ivan. Maybe Ivan wasn't in there. It's my memory. I do a lot of interviews, but I know I talked about it. And that's, well, isn't it interesting that we're at the 50-year anniversary of the gold standard? Yeah. Are we setting up for a jubilee? And I think that's a very, very important question.
That's very, very valid. Yeah. I think you might be right. It's we're all just laughing about the debt now. It's like, yeah, what's another 3 trillion? I mean, that's another 2 trillion. Literally, that's what they're talking about in Congress right now. They're arguing over, whether it's going to be 3 trillion or 2 trillion. It's like, who cares? Make it 3 trillion.
The Congress critters, the senators, the political class don't have a clue about hardly anything. Yeah. Almost all of them. There's exceptions. I mean, there's some really good people in there, so I want to be fair. But in the overall assessment, most of these people don't know anything about anything. And yet there are quote unquote leaders. I mean, what you really need is, you need the scientific, you need engineers basically. And I'm prejudiced as a trained engineer. I haven't had that career for decades, but you have to have solutions to the problem. And it's very basic, Jim, and you already touched on it. As a member of the Northwest Mining Association has a moniker, if it can't be growing, it has to be mined. So that's really as basic as you get. You either grow your food or grow your animals, or you mine something out of the ground. And that's the basis of all society. I mean, think about it. Mm-hmm. You have a wood house that comes off the land, and I won't expand on that idea. Just think about it. If you can't grow it, you got to mine it. Yeah. And yet we're having this food panic almost. I mean, it's going to get to a panic, I think, by the end of this year. And I think that panic is going to be pretty much countrywide. I don't think it's just going to be, China. It's going to be pretty much everywhere. Is it like, pull out your hair and there's nothing left to eat? No, but it's going to be noticeable for almost everyone. And then going to the mining, to me, it looks like it's almost deliberate. Put on that conspiracy hat again. Is it or isn't it? I don't know. The thing about conspiracy is if you just remove that word, it's either true or it's false. And that's really the question. Is it true or is it false? Well, it's true that we're not putting enough capital into the resource sector to basically maintain where we're at. But we're all going to go to EVs because that's more, environmentally friendly. And it actually isn't, but I won't go into that argument right now. It kind of ticks me off, but I won't go there. What I will say is we'll go along with them. So, okay, we're going to go to EVs. Well, you still got to mine the crap out of the battery metals to do that.
Yeah.
So I don't know, Jim, I could rant on this for long. I'm starting to get my blood pressure up. So I'll turn it back to you, but it's infuriating to think that we, the people, have done what we've done. And I don't know if you can read my shirt or not.
Yeah, I was going to ask you about your shirt. Tell us, show it to us.
Yeah, it says, when tyranny becomes law, rebellion becomes duty.
Awesome.
That's good. Excellent. Yeah.
Where'd you get that shirt from?
I got it on one of the, many sites that I read avidly, and they usually have a t-shirt, thing to help their site or help their blog or whatever. And a lot of them I just pass on. They don't resonate with me, but this one really did. It has "We the People" in the middle of it as well. So
Nice.
I got to have that shirt.
Yeah. Yeah. We need to start selling t-shirts. Everyone keeps telling me we need t-shirts or we need to sell merch, but we just never get around to setting up a merchandise store or anything.
Nice little end the Fed.
Yeah. Yeah. Hashtag end the Fed.
Anyway, get the end the Fed. And, for guys like me, get not only a t-shirt, get the golf shirt with the collar. And so it's $35-40, whatever. I'd buy it to have end the Fed over here and just casually have that message as I'm walking around wherever.
Right. I'll have it up for Christmas. I'll get my Christmas merchandise store going. All right. Well, Mr. Morgan, thank you once again for joining us. Thank you for sharing your knowledge.
Yeah.
In your latest article. We really appreciate it.
Well, Jim and Ivan, thanks for having me, and thanks for letting me just speak it out. The 2000 is, it's a clickbait, I guess you would say. I don't really care. I'm trying to give the message that most people haven't heard yet, which is really infuriating to me because, and this will swing both ways. There'll be people that'll actually take the time to understand what we've discussed. When they listen to the video, they'll get it. But if they just read the headline, they'll go, "Man, he's smoking. He's really gone up."
They're gonna think we're a bunch of hypesters or whatever. But I don't care.
I don't either because
I'm gonna go total clickbait on this title. So
Oh, that's good.
All right, thank you. I'll look forward to speaking with you again.
Thank you, everyone.